last 48 hours, two more cases of bank fraud have emerged. One is an allegation that Delhi-based jeweler Dwarka Das used letters of credit from Oriental Bank of Commerce to pay off other creditors to the tune of nearly 390 crore rupees. The other is the case of Simbhavli Sugars. Again, the bank allegedly defrauded his Oriental Bank of Commerce to the tune of 97 crore rupees. The modus operandi here was taking loans to finance sugarcane farmers but then diverting the money. These cases have come to light even as further investigations and arrests continue in the Rotomac case, where loans worth over 3,600 crore rupees were allegedly diverted, and of course the now infamous PNB case, where the declared liability by the bank is over 11,300 crore rupees. Now the question is, why are so many cases coming to light now in quick succession? Are banks under greater scrutiny, being more cautious, and how many more skeletons are waiting to tumble out of the closet? To speak on this, I'm joined today by Rajesh Chakrabarti. He's Executive Vice Dean at Jindal Global Business School and Editorial Director at Swaraj R Jagannathan. Thank you for speaking with us and welcome to the show. Mr. Jagannathan, we have seen two more cases added over the last couple of days. Do you expect more to come out even as banks become more cautious of the scrutiny that they will face?
Yes, certainly, though it would be too much to say it's the tip of the iceberg, which assumes that a lot more is rotten in the thing. But a few more skeletons are bound to tumble out whenever such big scams come to light. The reason is very simple. The banking operates on a simple principle where banks lend money to a lot of people, and then when they harvest the profits, and that comes back to the banking system. There is a cycle. Once this cycle gets interrupted at various points, either because banks are worried about lending to various parties, or because various parties have gone into liquidation, or they've gone into various other kinds of trouble, lower exports, lower realizations, then credit starts freezing, and a lot other people who would not be usually affected find their money flows constricting. So there will be other defaults triggered by a chain of defaults. This is what gets the banking system all in trouble. If all banks start squeezing credit because they are now worried about what might be right or wrong with some doubtful accounts, which may look good, but which may not actually be good once you look beneath. So I think this level of increase in caution will itself trigger a lot more such failures, because when money stops flowing, more people start feeling the pinch, and some accounts start getting bad when they may have been marginal cases. So I would expect that this system will throw up many more such cases, though I wouldn't say that it's going to create any systemic crisis.
These specific cases are beyond just the regular NPAs that we've been seeing over some time. And I want to come to Mr. Chakrabarti on it, because these four cases that we've cited today, Mr. Chakrabarti, are about allegations of diversion of funds. Funds basically taken saying something else and then used for something else, even though the methods of diversion may be different. It was LOU and LOC in two cases. There are other examples in the other two cases. This, don't you think, is the most concerning thing? That it wasn't just a few companies or one companies and some managers. It seems to be a system, a pattern in the system.
Yeah, absolutely. It's a matter of grave concern. What is obviously wrong here, or what is becoming visible, and as you rightly said, we don't know exactly how many more such cases would come up. Hopefully, not too many more. But there is a general pattern of poor corporate governance and supervision and checks, due diligence, that is obviously getting flagged here through these new problems. They are systemically different from NPAs, where NPAs result out of business failure, and one could say that misjudgment by the lender, but also possibly just pure business risk of things going bad for the borrower. This is clearly a failure of the auditing, looks like there is clear evidence of malintentions of trying to divert funds. fraudulently.
Another thing, if you look as a common thread, perhaps, at least superficially, Mr. Jagannathan, between all of these cases, is that those who have been named in the allegations, the promoters of these companies, were effectively using these loans to pay off other loans. It's sort of round-tripping of funds. They're taking on credit to pay off other creditors. And does that point to larger signs in the system and in the economy, because these promoters seem to be scrambling to cover the next loan and perhaps, hide the rot there?
Yeah, I mean, I'm sure there will be many such cases. Let's see one fundamental thing that has been true of many, many borrowers, and not just the names you mentioned, is that Indian promoters have had very little personal skin in the game. By and large, they inflate and gold plate projects costs so that banks lend, say, 20% more than what is required for the project. And then this 20% extra is then routed through various shell companies as though it is the promoter's contribution. So my point is, what really is happening now is that as everybody starts cleaning up their act, and borrowers find that either they have to put their own personal wealth into the game, or they'll have to find other ways of borrowing from somebody else and try and give their contribution, keep their accounts clean so that they don't go into NPAs, and from NPAs don't go into the IBC. So my point is, everybody is trying to make sure that their accounts are getting cleaned up, but in the process, many more will get revealed, because I think if you're just shifting money from one account to the other, and if all banks start tightening up, somewhere the music will stop and the buck will stop somewhere. So I think it is the promoters really need to learn the lesson, and bankers learn to learn another lesson, that if you cannot put some of your own money into the business, I think don't expect banks to give you 100% of the finance, pretending when 80% is the cost of your project and 20% is your contribution to the project which you're not bringing. So these kinds of diversions are actually an indication that finally this no skin in the game business is coming to an end, and that is a good thing. But in the short term, it is scary, because you're going to find many more such defaults and frauds coming out.
And they're coming at a time, Mr. Jagannathan, where the credit offtake is not as high as it needs to be. There are concerns about private investments being kick-started in the economy. Is this a tricky period for this cleanup?
Yeah, absolutely. In the next year or maybe even 18 months, you're not going to see a major pickup in credit demand, because banks are getting cautious and borrowers, as you know, the double balance sheet problem is going to get corrected. Over and above that, there is an overlay of fraud, which means that more banks will need more capital in order to keep their heads above water. I doubt that the 211,000 crore that the government is committed in terms of equity infusion over this year and the next is going to be enough. The government has to keep the powder dry and make sure that some more money is available. Maybe another 50 to 75,000 crore is going to be necessary in order to get the credit cycle up and again going. I think till that time, you're going to see shriveling of credit in large parts of the economy. The only guys willing to lend will be the private sector banks, which are well capitalized, and some of the much larger banks like State Bank. But the mid to medium to near big banks in the public sector will actually start freezing lending. And you are going to see a problem with the credit cycle in the coming 12 months. Unfortunate, but I think it's necessary part of the cleanup.
Okay, Mr. Chakrabarti, the question has to be asked about why public sector banks, because time and again, at least in the last few cases which have come to light in the last 10 odd days or so, there is a consistent pattern of public sector banks which seem to be easily defrauded by these promoters. There are allegations that in most of the FIRs, unnamed bank officials have been named from each of these banks. Does it not point to a larger malaise, and have public sector banks not taken a beating as far as the image is concerned?
I'm sure that the beating for the image is very real. But if we dig deeper and try to find out the answers to why these things always seem to be associated with public sector banks, one of the things to keep in mind is that we still have a system where over 70% of the assets in the banking industry is in the hand of public sector banks. So simply the odds are going to be higher that it will be a public sector banks which will come up with these kinds of these problems will be found there, just because they form a much larger part of the banking sector. That's one. The second thing is, it is undeniable that some of the managerial talent pool that the public sector bank draws from is probably shrinking because of their inability to stay up to speed with compensation levels that are there for other banks. So that could be affecting the supervision levels internally as well. But on the other hand, to think that all public sector bank systems are not right is probably not the right way to think about it. Banking scandals have been universal. I mean, they have happened in developed countries with the best banks around the world have fallen prey to them. Rogue traders have taken down century-old institutions like Bearing Banks and Society General and other banks. So these things happen. But given the fact that, yes, now we are seeing a sudden concentration of many of these incidents around the same time, it does seem that the malaise is more widespread than an isolated incident in one individual institution.
Absolutely. It seems larger than PNB. How much larger is difficult to say as of now, but there may be more cases coming to light over the next few days. Thank you so much, Rajesh Chakrabarti R Jagannathan, for speaking with us this evening.